Hi, Ryan Hanks here, founder and CEO of Madison Capital Group, coming to you from our new headquarters here in Charlotte, North Carolina. We're excited to announce that we've moved into our new headquarters here about 8 weeks ago. We're excited to be in this new space. We think it's kind of a new beginning for Madison Capital Group. It's amazing to see where we've come from, starting from one employee in 2009 to over 400 employees nationwide. I'm really proud of what our team's accomplished, and I think this new building showcases that in a great way. What I wanted to do today is kind of give a little bit of the State of the Union on where we are at Madison Capital Group here in January of 2026. It's hard to believe that when we look at the last couple of years, the amount of volatility that we've seen in the capital markets, really starting since the fall of 2022. And remember, that was 2 years after a national or a worldwide pandemic called COVID. So it's really been a stressful time to be in the real estate investment business, really stemming from COVID on. Obviously, we had a boom coming out of COVID. You had almost 0% interest rates. You had a lot of things happening that didn't make sense. And then you went from that to a period of complete uncertainty as you've had a substantial amount of interest rate hikes, in fact, more than we've ever seen in the history of the United States. So I can say as a business owner, navigating all of that since 2020 has been a challenge. I really believe where we sit here today in 2026 is we're now entering in a little bit of a normalcy. It's very clear that interest rates are on their way down. You're going to see a new Fed chair in office this year. We obviously have a presidential staff that wants to generate more growth in the economy. All those things are obviously great for our business, but I think it's bigger than that. Whether it's back to the office, whether it's interest rates, I just think you'll see normalcy. A lot of companies have been in this transitional period over the last couple of years, and I think, again, it's been hard to navigate how to build a business around that uncertainty. And so where I sit today is I think we went from headwinds to tailwinds, I would call it. And I think 2026 is really the start of that for Madison and probably the industry as a whole. We obviously have had great success since we started Madison Capital Group. We're very proud of our track record. We had to make some difficult decisions the last couple of years as it relates to distributions, dispositions, recapitalizing assets. I think anyone that's been building a business at scale in the real estate industry has probably had to face similar challenges. I think we've navigated those as best that we can, maybe better than most. And so I'm very proud of our team for what we've accomplished over the last couple of years and navigating really difficult waters. We feel like we're positioned for offense in 2026. I think the last couple of years has been defense. We want to be back in revenue generation mode. We want to be back in disposition mode as well as acquisitions. We're obviously aware the last couple of years we haven't transacted as much as we would like on the disposition side. We've also been very, I think, guarded in new opportunities too. We've been slow to invest. We've been slow to make investment decisions because, again, there's been uncertainty. Now we see the things a little more clear. We see opportunities a little clearer. It's easier to plan and budget over a falling interest rate environment rather than a rising interest rate environment. We feel great about the markets we're in. We always have. In fact, I think that along with our diversification has probably been one of the biggest drivers of our success. Keep in mind, we haven't steered from our principles about investing in the Southeast and the Sun Belt. We're very bullish on Florida. I had the great pleasure of spending time with Ron DeSantis recently, who came to Highgrove, for those that are familiar with the course that I recently built. Really what he's done in the state of Florida has really been phenomenal. We like their political views in terms of getting people down, a very pro-business environment. Those are the kind of places we want to build around. We're fortunate to be in Tennessee. We're fortunate to be here in the Carolinas. We've been in and out of Texas throughout Madison's history. Probably see ourselves being more active there. So again, we're very fortunate to be in markets where people continue to move to. There are no income tax states. They're business-friendly states. Those are the types of places that we feel people want to continue to move to. They want to grow their businesses in. So you continue to see this migration from some of the West Coast states, the northeastern states, to where we own assets. Like that, institutions want to invest in those markets. Look at what you've seen in Florida. In the matter of 3 or 4 years, West Palm to Miami, Tampa to Orlando have become absolute juggernauts in terms of population growth, institutions take advantage of that, or they see that trend and they want to invest in those markets. Again, West Palm to Miami alone, when you look at the amount of movement from pension funds, institutions, private equity, hedge funds, etc., it's really been phenomenal and a trend that we've not seen before. So we're fortunate that we've been active in those markets. We have a track record in those markets. Personally, using Florida as an example, I've been involved in the investment development of over 11,000 apartment units in every part of Florida, the Panhandle, Central Florida, Jacksonville, Southwest, Southeast Florida. So again, that's a great example of a market that we've had success in, and I think we're going to have continued success in. So that diversification of not only assets, but also just markets in the Southeast has helped us tremendously. And then I'll talk about the diversification of our product type. Obviously, multifamily's had a little bit of a stagnation over the last couple of years. We've seen that kind of change. I've been in multifamily my entire adult life. I've seen multiple cycles, coming from the dot-com bubble to the Great Recession in 2008, to whatever you want to call this last couple of years. Oversupply, high interest rates. I will tell you without delay that multifamily always rises to the top. People need a place to live. It's really kind of the lifeblood housing of the American economy. And so I feel very confident that we're going to see continued growth in the multifamily space. Madison has a great track record of investing in multifamily. A number of our team members, Ken Carpenter, McCarley Davis, Colin Ross, to name a few, have decades of experience of investing in institutional quality multifamily real estate in the Sun Belt. We're poised to grow. We're poised to be on offense in that space. We feel like we've come out of the worst of that market over the last couple of years, where you see stagnant rent growth, insurance expenses have been rising. Those are all truths, but we've been able to fight through them. And I think what we do going forward is going to be phenomenal in the multifamily space. Now switching to Go Store It. For most of you, you know our business there. We're one of the top 15 operators and owners in the United States. We've got probably about a $3 billion storage portfolio nationwide. We have assets in California, all the way through the Midwest and Southeast and the Northeast. We've been able to scale that business pretty remarkably. When I started it in late 2013 is when I had the idea and the vision for Go Store It. We really got it ramped up in 2014. Again, it was just myself. We had about 5 employees at Go Store It for a couple of years. We only had about 5 or 6 assets, but I'm really pleased to where we built that business today. And I think that company is really poised to do great things as a standalone business, whether that's in an institutional way, a public way. I can really see some big opportunities in Go Store It. Like multifamily, you had rents declining, you had REITs that were beating each other up over rental rates. I don't think anybody could underwrite what the lack of movement in the U.S. would do for the storage business. If you look at, if you think about it practically, you had interest rates rise. You have a big piece of the economy or the country that has mortgages at low interest rates. So why would they move and swap a high rate from a low rate? So we really saw America kind of stand still in a very unusual way the last couple of years. And so storage was really a byproduct of just that in itself. And you really didn't see a lot of movement in the storage space. You see all occupancies kind of flat. We saw rents kind of flat, if not declining, as REITs were vying for that occupancy growth. Now we've seen a complete reversal. Now rates are rising. REITs are being more aggressive. We're obviously, benefiting from those headwinds, or tailwinds rather. So storage has been a really fun business to be a part of. I'm really proud of our team. I'm excited about the continued growth for Go Store It. Right now, like I said, we've got a little over 200 assets in the portfolio. We're starting to grow our third-party management business. We're starting to grow our development pipeline. I think it's important to note that we have a number of institutions and family offices that we partner with in the self-storage space. Yes, we've raised a lot of capital in the private network, but we have some of the biggest institutions in the United States that have backed us in that space. JP Morgan, Cerberus, Crow Holdings, Clarion, just to name a few, are all invested with Go Store It today. And the people that we're talking to are just as big, if not bigger, on scaling that business going forward. One kind of announcement I would make is we are kind of morphing Bluegate more into Go Store It. As many of you know, we started Bluegate as its own separate business for boat and RV storage and marinas. We saw the fragmentation that we witnessed in storage happening in that space. We still believe in it, but we felt like the synergies that we had created in Go Store It really benefit Bluegate. So you may not hear about Bluegate as much. We basically took Banks and that team and rolled them up into Go Store It. We just think that's going to help that business grow more. And again, most people don't know, we've got an institutional joint venture partner in that space, Gem Realty, GEM, out of Chicago. They raise a tremendous amount of institutional capital, invest with operators like Madison and Go Store It. And so we're really trying to scale that platform, both on the boat and RV storage and the marina side. But again, you may not hear as much about Bluegate, but fear not, it's still active, it's still growing, but under the Go Store It banner. And lastly, I'll talk about Madison Commercial for those that aren't familiar with that part of Madison. It's been kind of a quiet part of our platform, but one that we probably see the most amount of growth in. We're really focusing on net lease acquisition, net lease development. Some of you have seen us do a lot of these single tenant build-to-suit deals over the last couple of years. We're going to ramp that up. We've got some great relationships. We've brought in a seasoned veteran, Matt McCoy, who's got decades of experience. And when you combine that with Ken's experience in the net lease sector, combine that with our vertical integration of Benco, which is our general contractor, we really think that vertical integration is going to pay off dividends, and not only raising capital in the high net worth sector, but again, also raising capital from institutions. We've been fortunate that we've been able to do a lot of 1031 transactions in the net lease space recently. I think you'll see more growth from us there. Again, looking for interesting opportunities that provide stable cash flows is really what it's all about in the net lease sector. So we're really excited to have Matt aboard, and I'm excited to see what Matt and Ken can do in that space. But those are all really high levels of where we are in our different verticals. I know you hear me talk about it a lot, the vertical integration. For those that touch and feel Madison and work here will tell you it's very real. A lot of companies use that tagline as a little bit of a punchline to get momentum and traction. It's very real. There's a lot of blood, sweat, and tears that I've put in this business to create that vertical integration. As you can imagine, managing people and building out that infrastructure has not been easy. And it's not been easy since 2020 on top of everything else. So we take a lot of pride in that fact, and there's not many firms that acquire, manage, asset manage, develop, and construct all these different product types and do it at scale. I can tell you it's not easy. It requires a lot of infrastructure. It requires a lot of processes. It requires a lot of procedures. It requires a lot of decision making. And one of the things that I really want to clarify is I think a lot of people know who I am. I'm the face of the company, and that's great. But the reality is that we've got a substantial team here in this office. We've got 5 other large regional offices throughout the country, strategically located, not only by where we're doing business, but also where talent is. That's in Florida, Tennessee, Georgia, Charleston, and Newport Beach, California. So I really want to, instill on people that we have a very large infrastructure. We have a tremendous amount of talent and experience, not only in this building, but throughout the country that really support the vision that I had. And they're here to execute on that vision. And the way that we've structured our company is it's not Ryan Hanks runs all. We have different presidents of each vertical. We have Matt running commercial. We have McCarley running multifamily. We have Scott running Go Store It. We have Josh running Benco. I want to really instill on people, these are seasoned pros. They report to a board, which I'm a part of. I'm chairman of the board. They report to an investment committee, which I'm obviously a part of. And again, those committees and boards are extremely seasoned people. We have a board made up of 3 executives that ran 3 of the largest REITs in the country: Amco Residential, Archstone Residential, Public Storage, David Dahl, who's the former president. I don't think people appreciate what that means, the confidence that gives me, the experience that I'm able to tap into is really phenomenal. So I really want to, the takeaway for this kind of State of the Union to me is, we're doing great things. All is well. We're weathering the storm. We want to be active on the disposition side. We more than anyone understand the recycling of capital is a big part of what makes the world go around in the high net worth and private retail channel. And so we're very cognizant of that, but we also want to make smart decisions. We want to make the best decision for our investors, not for Madison Capital Group. And I think our company's done that over the last couple of years. And we're going to continue to do that in the years to come. But again, we hope this is kind of informative in terms of a little bit about what we've been dealing with the last couple of years, how I see the future, about, our company. But again, I think for me, the big takeaway is we're cognizant of where we've been. We have a clear vision of where we want to go. And again, we have a lot of people that help support me. A lot of people have helped make Madison successful that are here in this office. We couldn't be more excited to be here in this office. We think it's really kind of given us a fresh set of legs, so to speak, when we think about 2026 and maybe a little bit of a fresh start as well. Let's reset interest rates. Let's kind of reset our thinking a little bit. Let's work smarter, not harder. Let's, maybe addition by subtraction is kind of, or subtraction by addition, I should say. But anyway, we're really excited about the future, and we're very appreciative for the support that you've given me and Madison over the years. Thank you.